Okay, so I think, first of all, technology is very often about trade-offs, and I don't think blockchains are any different. So when people look at a blockchain and they think this is very slow, it costs a lot to make transactions, especially in certain parts of the market cycle, really that's because you're trading off some of that scalability for more decentralization or more security. And so this is a very basic and common framework to think about blockchains, that you have scalability, you have security, and then you have decentralization. So I think this is a very important concept to grasp, because it's not the case that you couldn't create, say, an Ethereum or another public blockchain that works faster, but that means you have to trade off some of these other aspects. And so that's one of the parts that they address in this letter, that it doesn't necessarily work, say, as fast as you would want it to work for consumers. Over the last few years, we've seen other blockchains, public blockchains, come to life, which make other trade-offs that maybe sacrifice some of the decentralization aspect in order to have more scalability and more throughput. So I think that's a very important concept to think of here. And there are other trade-offs that they talk about in this letter as well. So privacy is an aspect that they mention, which I think we'll talk a bit about later as well. Privacy, the flip side of that is transparency, right? And I think blockchains are quite unique because they do have, especially public blockchains, they have much more transparency than the current financial infrastructure. And so, we heard about Luna earlier, an example of, that's not something that you want to see happen, but the transparency of the blockchain allows you to actually dig into it and understand what happened days or weeks after it happened. If you compare that to the great financial crisis in 2008, think about how many doors you had to knock on just to get the information to understand what really happened. So I think that's another trade-off that you have to think about. And from a regulator's perspective, I think the transparency of blockchains is actually a huge benefit compared to trying to regulate the financial sector, which traditionally has been much more obscure and obfuscated. And you have to impose certain reporting requirements in order to improve that. So I would say transparency is a major benefit of blockchains, and it also gives consumers, users, investors a way to audit whatever it is that they are looking at. And so, I think we'll talk a bit more about that later, but we have some recent examples of, say, Hodlnaut, for example, where it turns out that you could have a lot more you have a lot of transparency, and perhaps you could have looked even more into that as it was happening. And you might not be able to stop everything before it happens, but you're able to monitor what kind of transactions take place. If you see an entity that manages, say, $500 million worth of customer deposits, you probably want to know what they're doing with those assets. So it's not a black box. That's both from the regulator perspective, but also from the consumer's perspective. So I think there are a lot of benefits to blockchains that maybe most people are not aware of, but it's important to think about the trade-offs you're making when you talk about these different...
So Alex, I think that if I have to really take the three big issues still there, cost issue, it's still expensive to use this technology to build these assets. Second, I believe it has been resolved, the whole energy consumption part. And third, if you have heard Ravi Menon's speech, he never used the word blockchain. He kept on using DLT. There's certain dislike for the word blockchain.
Yes, yeah, you have some of these kind of euphemism almost, right? You could argue that you could say perhaps DLT is somewhat of a euphemism of blockchains. I think there will be different opinions in the panel about that. Maybe digital assets are a euphemism for cryptocurrencies to some extent, or crypto assets rather. So yes, there is a lot of, you have to think about these things.
So they really doesn't matter whether you call DLT or blockchain.
I think some of it is literally just words. And you go to this specific audience, they will use these words because they happen to be more TradFi, traditional finance oriented. Another audience will be more crypto oriented, but really they're talking about
the business case which drives the definition.
Yeah.
Not the technology. Technology is still the same.
Well, the technology is not the same.
Okay.
Well, the technology is the same between the groups, but it's definitely different from traditional finance infrastructure and so on.
And the energy issue has been resolved?
It will, I mean, I'm not going to say it's going to be resolved, but in about 3 weeks, there's an upgrade from Ethereum
Yes.
to Ethereum
The
2.
layer 2 coming.
Yes, exactly. And this will drastically reduce the energy consumption, which, by the way, I think is another point in this letter. They don't really talk about how you've had a lot of evolution and development within the blockchain space. It's not the case that, you know, back in 2010, 11, you had Bitcoin, and that was pretty much it.
Sure.
You had Ethereum come along and address that, hey, maybe you want to create applications that can do anything, right? That's the major innovation from Ethereum compared to Bitcoin. And now we're seeing another innovation with regards to the consensus protocol, which can drastically reduce the energy consumption.
Last cost, very expensive still. It's still expensive than any other technology stack we have today. Perhaps when I come to the next question, it'll come there. Expensive technology.
Yeah, I mean, I think you have to compare it to the right benchmark. If I want to send US dollars from my bank account to a completely different country in the world, it can cost me quite a lot of money, actually. And it's also slow, and there's about a 30% chance that the receiving bank doesn't acknowledge it and sends the money back while still claiming a fee. So I think you have to benchmark it in the right way. If I send stable coins, for example, USDC or Paxos USD, that can cost me $1 or less.
So it'll be priced on the product benefit, and then the price will not be a big deal.
But it's about trade-offs, right?
Okay.
So if you have a centralized entity that allows you to make free transactions, then you're probably giving them you're trusting them.
Sure.
But if you want to trust the layer 1 most secure blockchain, it's going to cost you a little bit. Yes.
Now the second round of question is going to focus only on the assets, because we should not forget the Web 3.0 has got these products, the fungible, non-fungible assets. Keep aside the tech capabilities. We spoke about it, you spoke about it, Umar spoke about it, and a lot of tech application. Let's now focus on second round on these assets, because that's the future of internet. That's where everybody will head to. And the kind of assets the future will start having are those two assets. Now, Alex, the problem regulators have today, once this asset reaches certain scale, very hard to regulate them. They're decentralized. They are not that transparent sometimes. So do you have an answer to that from a technology standpoint, so the regulators get comfortable as those asset class grows dramatically? And that will grow. That's the future.
Yeah. I think you have to slice the world in a few different ways. First of all, it's important to think about decentralized protocols.
Yes.
So examples would be Uniswap, Compound, Aave. These are protocols that manage billions of dollars, and they're smart contract-based, open source, right? On the other hand, you have what you could call crypto businesses. And so these are run by human beings. They're incorporated, for example, in Singapore. But they are not typically open source, and they don't have the same extent of auditability in real time. And so there are a few different ways that you can think about these two categories. The first one is that maybe the good part of the decentralized protocols from a regulator perspective is that they are auditable in real time. You can see everything that happens.
Which is both assets.
Yes, yeah, for both assets. The other category, however, these are not auditable, but you can enforce regulation on them, right? So you can say, you're not allowed to do this, we will intervene if you do it, whereas a protocol runs
But this is outside the margin.
Exactly. So from a regular perspective, I think you have to accept that you have to regulate at the edges of the ecosystem. So, and by that, what I mean is think about the traditional finance, fiat-based world, which is kind of at the outer circle. And then the inner circle would be say, a public blockchain, right? So you typically could regulate when you go from the outside into that ecosystem. Once you're in the ecosystem, it's very hard to enforce. But I think it's extremely important to recognize that you can still monitor and audit to see what's going on. And so there are some interesting cases, like I mentioned earlier, with the case of Hodlnaut and a few other entities, where you cannot get full insight into what they're doing, but you can see what happens on the chain.
I see.
Right? So that's very, very important. And sometimes that can allow you to perhaps intervene, which I think is important. So you have to think about that from the perspective of these two worlds, and these assets typically will be transacted, and you will use them on both types of platforms.
Smart contracts, automated, autonomous organization, very complex. How do you regulate these smart contracts?
It's hard, right? I think Project Guardian is interesting because you might have kind of a separate ecosystem that has more of a permissioned ecosystem where you could allow for smart contracts to happen, but perhaps there's more control with regards to who can participate in that ecosystem. I would say though, it's a shame, like I don't think anyone would benefit really if you block or try to ban the permissionless and public use of blockchains, because so much of the innovation happens there. That's where you have this permissionless innovation.
Then you are bringing censorship now.
Yeah, that's one way to think about it.
But then that's not what they want.
No.
Yeah.
We don't want censorship. Like, I mean, that depends. It depends on your from what perspective.
Okay.
But I do think it's very important to be thoughtful. It's not black or white. I think that was also MD's point earlier, that you have to have nuance. Sometimes that's hard to communicate if you just want the headline.
Yeah.
But these things can coexist, right? You can have permissioned ecosystems. You can have permissionless ecosystem. And very often, almost by definition, the permissionless ecosystems will stay ahead of the permissioned ones because of permissionless innovation.
Sure.
And they can build on top of other platforms, right? You can take Uniswap, you can integrate that into something without asking Uniswap for permission, and just issue a smart contract. So it's hard to enforce regulation, but you have full auditability.
Okay.
The enforcement, I think, typically has to happen either in permissioned ecosystems or at the edges.
Outside, so what can go into the system, what kind of product you allow, not on the program itself, inside this. Okay, well, it is going to...
Can I just give one suggestion?
Yes, please.
Because I do think that, I haven't seen this before when it comes to issuing licenses.
Okay.
I think one suggestion I have here is, if you're going to issue a license to an exchange in Singapore, why don't you ask them to disclose every blockchain address that they control, that they manage? It's a very simple suggestion.
I can
and
take
maybe a bit controversial.
I can take a quick poll. Who agrees with this? No comment.
For exchanges, lending platforms, and so on, I think it would be good for consumers. It would be good for regulators to have oversight.
Okay.
And it's not a big regulatory, or it's not a reporting burden.
Okay.
That's important, right? Because with traditional finance, you might have to spin up a whole team that does a lot of reporting. Here you're just giving the blockchain addresses to the regulators, let them look at it.
I didn't want to start the Tornado Cash issue now because